For years, 5 trader archetypes have quietly shaped the markets. They have built fortunes, wrecked careers, and turned overconfident traders into market legends told as warnings in trading forums and trading floors alike. The problem is, most traders have no idea which archetype they actually are. And chances are, you don't either. And that is the hidden danger. The gap between who you think you are as a trader and how you are really wired. It is like forcing a sprinter to run marathons or asking a natural extrovert to sit silently in a library. Sooner or later, the mismatch breaks you. This invisible trap is why so many retail traders burn out within their first 2 years. So, the real question is, which archetype are you? If you are ready to find out, keep watching. The hunter-gatherer gene that's killing your profits. For thousands of years, humans have survived by fitting into specific roles within their communities. The hunter, the gatherer, the sentinel, the shaman, and the warrior. Each archetype came with distinct neural pathways, risk tolerance, and decision-making patterns that kept the tribe alive. I guess it won't surprise you to know that trading didn't eliminate these archetypes. What it did was just digitize them. When you sit down at your trading desk, you are not just analyzing charts. You are channeling tens of thousands of years of evolutionary psychology through fiber optic cables. And if you don't know which ancient role you're playing, you will make modern mistakes with prehistoric consequences. Think about it. Why do some traders thrive on 5-minute scalps while others can't stomach anything shorter than monthly charts? Why do certain people naturally cut losses at -2% while others hold losing positions until they are down 50%? Why does risk management feel like fighting your own nature for some traders, but comes naturally to others? Because we are not all the same trader, we never were. Nobel Prize-winning psychologist Dr. Daniel Kahneman spent decades studying how the human mind makes decisions under uncertainty. His groundbreaking research revealed that we operate with 2 distinct thinking systems. System 1 is fast, intuitive, and emotional, while System 2 is slow, deliberate, and analytical. Dr. Kahneman showed that most of our financial mistakes come from System 1 hijacking decisions that should be made by System 2. What he didn't explore is how these systems play out differently across trader archetypes. A gambler runs on System 1. Gut instinct and emotions force them into rigid technical analysis, and they will abandon it or second-guess every signal. Then there are those who are analytical and operate purely on System 2. They are interested in data, backtests, and logic. But in fast markets that demand intuition, they freeze and get trapped in analysis. The beauty of it is that both can be profitable, but only if they truly understand who they are. So, how do you discover and confirm if you are a System 1 type of trader or System 2? Well, all you have to do is keep watching. The 5 types of traders. Comprehensive analysis of trading data from major brokerages like TD Ameritrade and E-Trade, combined with behavioral finance research from institutions like the University of Chicago's Booth School, reveals 5 distinct trader archetypes embedded in market behavior patterns. These aren't personality categories or trading styles. They are archetypal neural frameworks that determine how your brain processes risk, opportunity, and market information at a fundamental level. 1. The Sentinel Archetype Trader. A Sentinel trader isn't the type who rushes into the market looking for fast profits or thrilling wins. They don't chase hype, and they're never impulsive. Instead, they play the role of a watchman, always guarding risk, protecting capital, and quietly scanning for both threats and opportunities. Their entire mindset is built around one principle: capital preservation. For them, losing money isn't just frustrating, it feels painful. In fact, research shows that when a Sentinel's trade moves against them, the anterior cingulate cortex of their brain lights up. That's the same region that activates when the body experiences real physical pain. This wiring makes them naturally cautious. They don't set stop losses because a textbook told them to. They set them because their nervous system demands it. Risk management is hard-coded into their behavior. Their philosophy is simple: win by not losing, protect the downside, stay in the game, and allow the slow but unstoppable power of compounding to work over years, even decades. Think of them as a fusion of Warren Buffett's patience and Nassim Taleb's obsession with risk. They are drawn to stability. To them, wealth isn't built through excitement, but through consistency. And when bear markets hit, this is when Sentinels truly shine. While most traders panic and scramble to protect their accounts, the Sentinel doesn't need to adjust much. They have been protecting capital all along. But their greatest strength can also hold them back in bull markets. Their cautious approach often looks boring compared to traders riding flashy growth stocks or speculative plays. And when fear of missing out finally cracks their defenses, they tend to jump in too late, often at the peak. The best way to picture a sentinel is to imagine a castle guard. They may not win every battle or rush out for glory, but they make sure the fortress, their trading capital, never falls. And in the long run, that discipline is what allows steady and compounding growth to build real wealth.
While you're watching this, Bitcoin is smashing through major resistance and altcoins are going parabolic. We are looking at potential new all-time highs, the kind of momentum that creates life-changing wealth. This is what traders wait years for. The volatility is absolutely insane, which means massive opportunity for those positioned correctly. Smart money is loading up on longs while retail is still asking, is this real? But if you want to capitalize on this historic move, MarkX is throwing bonuses at new traders right now. $50 registration bonus. An additional $50 bonus for deposit of $100 and above. These bonuses cover 50% of your trading fees, meaning you keep more profits when crypto inevitably hits those next psychological levels. MarkX is handing out free money. The question is, are you going to take it? Join now using the link in the description and pinned comment.
2. The Hunter Archetype Trader. The Hunter is built differently from most traders. Their brain is a machine for pattern recognition, spotting subtle inefficiencies in the market that others overlook. But what truly sets them apart is their patience. They can wait not just days or weeks, but months, even years, for the perfect opportunity. Unlike other traders, their brain doesn't light up from small, frequent wins. In fact, quick scalps and tiny profits bore them. What they crave is the big dopamine rush that comes from executing a flawless trade after a long wait. To a hunter, one perfect setup is worth more than 50 average ones. This makes them thrive in strategies where patience and timing matter most. Their preferred weapons are technical analysis, earnings surprises, sector rotations, and strong fundamental catalysts. They excel at swing trading and position trading, where waiting pays off with premium returns. But this strength comes with weaknesses. The hunter struggles in choppy, sideways markets where no clear patterns emerge. In those conditions, their patience feels wasted, and they can become restless or second-guess their setups. Another pitfall is analysis paralysis, because they see so many variables and want the perfect entry. They often hesitate too long, only to watch a great trade run away without them. Sometimes, the pursuit of perfection becomes their biggest enemy. Famous examples of hunters include Paul Tudor Jones, Stanley Druckenmiller, and William O'Neill. Traders known for waiting patiently for the big opportunities and striking hard when the odds are stacked in their favor. In short, the hunter is like a skilled predator on the plains. They don't chase every shadow. They stalk, observe, and wait for the exact moment to strike. Because to them, one clean kill is worth more than a dozen failed chases. Number 3. The Explorer Archetype Trader. The Explorer thrives on novelty and uncertainty, while most traders see chaos and run from it. The explorer's brain reacts the opposite way. Their neural pathways light up as if they have just been handed a gift, because to them, uncertainty is opportunity. Explorers are the early adopters and trend spotters. They are drawn to the new, the untested, and the cutting edge. They are the digital gold miners, digging into unfamiliar territory before anyone else realizes there's treasure there. Their favorite playgrounds are places others find too risky or too confusing. Think of emerging markets, brand new asset classes, IPO launches, cryptocurrency before it goes mainstream. If you want a picture of an explorer, think about the person who bought Bitcoin at $100, Tesla before the Model S, or a biotech startup nobody had heard of yet. They always seem to have money in something the mainstream hasn't discovered. Their edge comes from a comfort with ambiguity and a willingness to bet on paradigm shifts before they are obvious. They don't need all the answers. They are skilled at recognizing potential long before the data is clear. But this comes with a danger, knowing when to cash out. Because explorers believe so strongly in the long-term story, they often hold too long. A 500% gain can shrink to 50% because they waited for the big future instead of recognizing when the inefficiency had already been priced in. Famous explorers include Cathie Wood, Chamath Palihapitiya, and the earliest crypto adopters. They built reputations and fortunes by spotting massive opportunities before the crowd, but also faced criticism for holding on to positions too long. The explorer is like a modern-day adventurer. They set off into uncharted territory, take risks others avoid, and discover opportunities long before the masses arrive. But just like the explorers of history, they must learn when to plant their flag and when to head home before the frontier turns dangerous. 4. The engineer, archetype trader. The engineer doesn't see the market as a battlefield of emotions. They see it as a complex machine. Their brain works like a biological computer, and what excites them isn't the thrill of guessing or gambling, but the precision of systems, rules, and formulas. For the engineer, discretionary decisions feel uncomfortable, almost painful. Their neural wiring craves structure, backtests, and statistical edges. They don't trade charts or news headlines. They trade mathematical probabilities. Their ideal environment is one where the rules are clear and repeatable. They thrive on algorithmic systems, momentum strategies, mean reversion plays, statistical arbitrage, and pairs trading. If emotion is the enemy of most traders, the engineer solves it by removing human emotion entirely. Every action is defined by code, numbers, or models, leaving little room for gut feeling. But they have their challenges. Markets are living, breathing organisms. They change, and when they do, the engineer's carefully built systems can collapse. A strategy they have backtested flawlessly for 5 years can suddenly fail in year 6 when the market regime shifts. What once looked like a perfect model can turn into dangerous fiction. Adaptation is the engineer's greatest struggle, because their brain isn't wired for intuition. They find it difficult to pivot when conditions change. They can overtrust the data, even when the market is screaming that the rules have shifted. But their salvation lies in building adaptive systems, models that account for changing conditions, and learning to accept that sometimes, no matter how strong the math is, a dose of human judgment is necessary. The engineer is like a master architect of trading systems. They can design intricate structures that outperform human intuition. But when the ground beneath shifts, they must learn to adapt or risk watching their flawless design collapse. Number 5. The Alchemist Archetype Trader. The Alchemist is wired almost in reverse compared to most traders. Where the average trader or investor panics during crashes and feels joy in booming bull markets, the alchemist's brain reacts the opposite way. If you could scan their brain during market extremes, you would see this inversion clearly. During crashes, their reward centers light up. They see opportunity where others only see fear. During euphoric bull runs, their stress responses fire. They feel genuine discomfort when optimism floods the market. This means the alchemist thrives in moments of maximum pessimism. They are the ones buying when everyone else is liquidating their accounts, selling their kids' college funds, and watching CNBC anchors speak like they are at a funeral. Their natural hunting grounds are market crashes, volatility spikes, distressed debt, and bankruptcy plays. Assets that the mainstream considers toxic waste. Simply put, they make money where others see only disaster. But this inverted psychology also makes bull markets torture chambers. In periods like 2017, when everything goes up and analysis seems irrelevant, the alchemist struggles. Their instincts scream caution while others ride easy gains, and worse, they are often right, but too early, calling bubbles long before they pop, and watching overvalued assets climb another 200% while they sit on the sidelines. The alchemist's true edge is their emotional resilience during chaos. When everyone else loses control, they stay calm and strike. But during long stretches of prosperity, they need monk-like patience to avoid acting too soon. Famous alchemists include Howard Marks, Seth Klarman, and Michael Burry. Investors known for making fortunes by buying what everyone else was desperate to dump. The alchemist is like a contrarian chemist, turning market panic into gold. Their gift is thriving in disaster, but their challenge is enduring the long, sunny days of optimism without letting discomfort push them into premature bets. Now the question is, can you recognize which type of trader you are? And when you do, remember this: your archetype isn't a weakness or a limitation. If anything, it's actually your hidden competitive advantage. Most traders make the mistake of trying to copy the styles of traders they admire, but that is backwards. The goal isn't to become a better version of someone else. It is to become the best version of yourself as a trader. And once you figure out who you are as a trader, you need to master your psychology. Watch this video to learn exactly how to build a strong trading psychology. Check the description to join our Telegram channel where I drop deeper trading psychology insights. Insights I can't share here on YouTube due to YouTube's limitations. On this channel, I share with you the trades I'm looking at and occasionally my A+ setups. If you found this video valuable and helpful, please hit the like button. Drop a comment on the archetype of trader you think you are, and interact with other traders in the comment. Until the next time, may the trend be with you.